Welcome to Quest for Knowledge. My name is Nagma and today we are going to go through with the answer book of economics. In this you will be able to get a very good idea how to score maximum in economics. Okay, and if possible we can get even centum in economics. So as you can see, the first question is the scarce resources of economy has competing usages. Why? Because we have wood. For example, when we have wood, we can make furniture out of that, we can make pen out of that, I mean pencil out of that, we can use it for the plywoods and all. It means that the resources has competing usages. Second one, when the supply curve is vertical, the elasticity of supply is zero. Okay, why? Because there is no more there is no elasticity of supply when the supply curve is vertical. When it is horizontal, it means the elasticity of supply is infinite. Okay, so second question, third is the change in TR, that is total revenue, due to sale of an additional unit is called marginal revenue. Do remember, whenever it comes additional, so that is marginal. Okay, and the year of Great Depression is 1929. Easy availability of credit encourages investment. Okay, so this is all the multiple choice question. So let's go through with the fill up now. The first question is scarcity of resources give rise to problem of choice. Why? Because we have the resources is very scarce and the wants are unlimited. So this gives us a problem of choice. Second, seventh question, dash is determined at the point where the demand for labor and supply of labor curve intersect. So that is the wage rate. Wage rate is determined when the labor and the supply of labor curve intersect. Third question is competitive behavior and competitive market structure are in general opposite related. Okay, it is inverse related. After that, ninth question, dash good will not pass through any more stages of production. So when the goods which is final, it will not pass through the various further stages of production. The answer is final goods. 10th question, financial year runs from 31st of March to 1st of April. This is the fill up. Okay, let's move on to the choose up. As you can see the question in the paper, TFC plus TVC is equal to, that is total fixed cost plus total variable cost is equal to our total cost. So this is the symbol of profit. Okay, symbol of profit means total revenue minus total cost, we get the reward, that is return. Domestic services is non-monetary exchange, something we give it in a non-monetary exchange, that is domestic services. Circulation of coin is from the government of India, not from the RBI, that is what here. Saving is income minus consumption, is the rest of the money is will be saved, that is saving. Let's move on to the 1 mark. Expand MRS. MRS is nothing but a marginal rate of substitution. When you need to produce maximum of bananas, you have to forgo some of the mangoes. So to forgo the other alternative is called as marginal rate of substitution. What is monopoly? Monopoly is a market structure where there is a single seller and large number of buyers. For example, in India, railway sector, government is the monopoly, and that is it. After that, question is name the well-known work of Adam Smith. Okay, an inquiry into the nature and cause of wealth of nation. So this is, he gave more priority to the wealth, so that is why it is the work of Adam Smith. 15th question is who are free riders? Free riders are the people who use the public good without any payment, so that is free riders. Open economy is which interacts with other economies through various channels and mediums, that is open economy. Okay, let's move on to the 2 mark question. The first question we have here is the preference of a monotonic preferences. What is monotonic preferences? The preference of a consumer over one bundle than the other bundle which contain at least one more of a good and gives him more utility is called monotonic preferences. For example, if a consumer has two bundles, one is X and another is Y. X contains 10 and Y contains 9. So the consumer will always select which gives him more satisfaction. He will select the X bundle. 18th is mention two different approaches which is explained by consumer behavior. We have cardinal utility approach, ordinal utility approach. Cardinal utility approach are which is quantitative approach, which we can measurable. Okay, ordinal utility approach is the approach which we cannot measure. It is done through orders and rankings, and it is a qualitative approach. The 19th question is give the meaning of price elasticity of supply and write its formula. It's very important. The ratio of percentage change in quantity supplied to the percentage change in the price of a commodity is the price elasticity of a supply. Nothing but change in quantity supplied divided by change in price of commodity is the price elasticity of supply. 20th question, what is the meaning of shutdown point? Shutdown point is in short run marginal cost curve cuts the average variable cost to its minimum is called the shutdown point, and in the long run, when long run marginal cost cut down the long run average cost in the minimum of the point, it's called as the shutdown point. Mention the condition needed for profit by a firm under perfect competition. So the condition is profit is equal to marginal cost. Marginal cost must be non-decreasing at Q0, and price should be the minimum of average cost. 22nd question is write the meaning of monopolistic competition and give an example. So this is reduced from your syllabus, okay, but anyhow for the knowledge purpose, monopolistic are the number of buyers and sellers closely related to differential product is called monopolistic competitions. 23rd question, what are the four factors of production and mention their rewards? Here we have the factor of production is land, so that we get rent, labor, they get wages, capital, they get interest on capital, organization, they get profit. So these all are the factor of production and their rewards. 24th question is three methods of calculating GDP. Okay, we have expenditure method, income method, and product method. What are the functions of money? Functions of money, it acts as a medium of exchange, measure of value, store of value, and transfer of value. The 26th question is write the meaning of excess demand and deficient demand. Excess demand is when the demand is more than the supply, that is excess demand. When the supply is less, deficit demand is supply is more and the demand is less, that is deficit demand. Okay, after that, this 27th question is investment multiplier. What is investment multiplier and write its formula. So the investment multiplier is the ratio of increment in the equilibrium value of final goods or output to the increment in autonomous expenditure is called investment multiplier. For example, investment is equal to 1 divided by 1 minus C. Okay, 29th questions are what are the three linkages of open economy? This is reduced. Anyhow, output market linkage, financial market linkage, and labor market linkage. 30th question, why do people demand foreign exchange? So we demand foreign exchange to buy goods from abroad, if we want to send gifts to abroad, or to purchase any financial asset from abroad. 28th question, what is the public provision and public production? Public provision are which is directly financed through government and can be obtained without any direct payment, that is public provision. We use dams, bridges, that is public provision. Public productions are the goods produced by government and we obtain it through direct payment. Okay, this is from part C. Answer any 7 of the following questions. This is very important, 4-mark questions. So the 31st question we have is what is the central problem of an economy? So we have a scarce resources to which we need the problem of choice arises. The central problem of an economy is what to produce in what quantities, whether to produce an agricultural product or industrial product, like that, and how to produce. So it describes about the problem of technology, whether labor intensive or capital intensive technology to be used, and to whom to produce, describes about the problem of distribution. So this is the central problem of an economy, which is very important one. After that, 33 question is a table which will be given. In that we need to find out total product of labor will be given, labor will be given. In that we need to find out about average product and marginal product. Through this formula we can easily find out the average product and marginal product. So the formula of the average product is total product divided by labor. So by that, as you can see, TP divided by L, 0 means 0, 15 divided by 1 will be 15, 35 divided by 2 will be 17.5, 50 divided by 3 will be 16.67, 40 divided by 4 will be 10, 48 divided by 5 will be 9.6. And similarly, marginal product, the formula is TPN minus TPN minus 1. We need to compare the first TP with the second. So 0 means 0 as it is will write. 15 minus 0 will be 15. 35 minus 15 will be 20. 50 minus 35 will be 15. 40 minus 50 will be minus 10. 48 minus 40 will be 8. So by that we get the answer marginal product. By that, this is the very easiest manner you can get 4 marks. After that, 36th question, write down the difference between microeconomy and macroeconomy. Microeconomy, we study about individual factors like consumption, individual production, about a firm, about supply, about demand, about price. So macroeconomy, we study about the economy as a whole. We study about aggregate employment, aggregate income. So microeconomic is called as a microscopic view, and the scope is narrow. And macroeconomy we study as a bird's eye view, as a whole, as an aggregate manner we study, and the scope is wide. Okay, so 34th is a question which is being reduced for this year, so that will omit. 38th question we have is write a note on externalities. So externality means an unintentional consequences of an economic activity of a firm, either good or bad, that accrues to another person or firm is called externalities. So by unintentionally or anyhow, when it is affect any person or any firm, is called externality. So we have positive externality and negative externality. The for example for positive externality is like nuclear power energy. In that we can make weapon and it will help in defense. That is positive externality. Negative externality means with the ultraviolet which is being produced in the atomic nuclear energy, it is very hazardous to the people and nature. So this is negative externality, and to calculate GDP they don't consider negative externalities into account. 40th question we have is explain consumption function. It is very important question. Okay, consumption function is the relationship between income and consumption is called as consumption function. The consumption is very essential for human being. Even if the income level is 0, still we have some consumption to do, like for the psychological need, anyhow we need to eat to reduce our hunger. So these are, so that we need consumption. So the consumption which arises even without the income, that are autonomous consumption. So this is the diagram. This is our income, and the C is equal to C bar plus CY is the consumption function, consumption through the income. So in this diagram, C bar is the intercept of the consumption. There are two types of consumption, autonomous consumption and induced consumption. Autonomous consumption are the consumption which are done with the 0 level of national income. Induced consumption are independent of income, is called induced consumption. Now the another question we have, what is the feature of perfect competitive market? The feature of perfectly competitive market is there will be large numbers of buyers and sellers selling the same kind of a product. Second is homogeneous product. The product will be same with the different kind of a look. Okay, like how Pantene shampoo, Sunsilk shampoo, L'Oreal shampoo, Dove shampoo, anyhow the same kind of a product with different names. Perfect mobility. There will be perfect mobility. So they are the price taker. Okay, they are not the price maker. they are the perfect competitive. The best features is they are the price taker. The single most distinguishing characteristic of a competitive market is that they are price taker and not price maker, and the consumer will have good knowledge about the product, the price of the product, so they in the that is perfect knowledge. And then classic demand. The perfect competitive market has a perfect classic demand for its product to be sold. This balance of payment is being reduced right now, so that I'm omitting as it is. Okay. This is 6-mark question. Some of the macroeconomic, the question is explain the macroeconomic identity. So some of the macroeconomic identities are GDP, which is gross domestic product. This is also a very important question. GDP is calculated the total value of all goods and services produced in a country during a year. So GDP is equal to consumption, investment, government expenditure plus export minus export revenues earned excluding import. So export minus import. So that is the GDP. GNP is the gross national product, the aggregate money value of all goods and services produced in a country during the year and including net factor income from abroad. So that is GNP. So the formula is GNP is equal to GDP plus and net factor income from abroad. NDP is net domestic product, the aggregate money value of all final goods and services of a country minus depreciation. So NDP is equal to GDP minus depreciation. NNP is net national product. It means the aggregate money value of all final goods and services of a country minus depreciation. So NNP is equal to GNP minus depreciation. After that, we have NNP at factor cost, the aggregate money value of all final goods and services including net factor income from abroad. So NNP at factor cost is equal to GDP plus net income factor from abroad. Personal income is the sum of total of all income that a household earn in the form of salary, rent, wages, etc. So personal income is equal to national income minus undistributed corporate profit minus interest payment made by the household minus tax paid plus interest payment made to household by government. Personal disposable income are the income which is available after consumption, after deducting tax and non-payment tax payment. So PDI is equal to income minus tax and non-tax payments. So that is personal disposable income. After that, 42nd question, this is again the very important question, that is the law of diminishing marginal utility with the help of a table and diagram. As you know, the law of diminishing marginal utility, we have some assumptions, that is other things being equal. The income will be unchanged, the taste and preference of a consumer will be same, the price of the substitute product will be same, and here the consumption should be made continuously without any time gap. So the law of diminishing marginal utility states that the more and more we have, the less and less we would like to have it. So as the consumption increases, the total utility increases, but the marginal utility, the additional usage, what happens, it decreases, turns into zero and falls into negative. For example, a consumer has a goods, a banana and a banana. The utility which he derives from the first banana gives him more satisfaction. So as he takes second banana, third banana, so that what happens, his total utility increases, but his marginal utility goes on falling and turns into zero and becomes negative. So as you can see, in the total utility it is increasing, and you can see the marginal utility is going on decreasing and turning into negative. And after that, in the same manner, it is shown in the graphical manner. As you can see, the total utility is going on increasing and the marginal utility is going on decreasing and turning into zero and falling into negative. So that is the very important question. Again, this is also a very important question. In this, you can attempt 3 of the questions. So in a very easiest manner, without much of hard work and doing in a smart work manner, you can really score a well marks in economics. So here you will be given a table. Okay, you will be given quantity and short run marginal cost. It will not give you the total cost. Now you have to calculate. Okay, the total fixed cost is also given. You need to calculate total variable cost, total cost, average variable cost, and short run average cost. As you can see, how do we need to calculate SMC? Through SMC we can calculate our TVC. Okay, the comparison of SMC is our TVC. So as you can see, when SMC is 0, TVC is also 0. When SMC is 500, TVC is also 500. So when SMC is 300, TVC is 500 plus 300, 800. 800 plus SMC 200 will TVC will be 1000. TVC 1000 plus SMC 300 will be 1300 TVC. So as it is adding up the TVC with the SMC, down part of the SMC, we can get TVC as it is. And when we get TVC, when we add TFC plus TVC, that is fixed plus variable, we will get total cost. That is it, 100 plus 0, 100, 100 plus 500, 600, 100 plus 800, 900. And then AVC divide, how we will calculate average variable cost is, when we calculate total variable cost divided by quantity, we'll get average variable cost. So 0 means 0 only, 500 divided by 1 will be 503. 500 divided will be 1 will be 100, sorry 500. 800 divided by 2 400. 1000 divided by 3 333.3. 1300 divided by 4 325. As it is, we can calculate our average variable cost. Average short run average cost, how we will calculate? Total cost divided by quantity. 100 divided by 0 will be 0. 600 divided by 1 will be 600. 900 divided by 2 will be 450. 1100 divided by 3 will be 366.63. 1400 divided by 4 will be 350. 1900 divided by 5 will be 380. 2700 divided by 6 will be 450. By that easily you can get 6 marks without much of hard work. Okay, this is again a very important question of the practical. Okay, a consumer wants to consume 2 goods. The price of banana is 4 and the price of mango is 5. The consumer income is 20. So the question will be asked, how much banana can she consume if she spend her entire income on that good? So as you know, the banana rupee is 4. So she can consume 5 banana with her entire income. And the same thing, why? Because 5 fours are 20. She can consume 4 bananas with her entire income. Why? Because mango price is 5. 5 fours are 20 again. The slope of budget, okay, the slope of the budget is always downward sloping. And the question is asked again, if you want to have more of bananas, do you have to give up mangoes? Is it true? Yes, it is true that if we have to consume more banana, we have to give up mango. Okay, is the product are equal to consumer income? Yes, the D one. Yes, the products are equal to consumer income. So by that easily you will get 5 mark without much to do. Okay, 51. Write a note on demonetization is also asked. It is very important question. I want you to prepare well with that question so that easily without much hard work you can get 5 marks. And after that, the question 51st question, it is asked, name the currencies of any 5 countries of the following. So it has been written all over all the countries' currency. As you can see, USA is dollar, UK pounds, Germany euro, Japan yen, China yuan, Argentina peso, UAE dirham, Bangladesh taka, and Russia ruble. Easily you can get 5 marks in this. Okay, the part C we have, what is the functions of RBI? So it is also a very important question. RBI is the apex bank and which has the sole authority to issue the currency notes in India, and it is established in 1st April 1935. So what are all the functions of RBI? Is that issue of currency note. Okay, coins is being issued by the government of India, but the rest notes are being issued by the RBI. RBI is the controller of credit. RBI has the authority of repo rates. Okay, whenever there is a liquidity of the credit in the country, it will try to control by increasing the repo rate. And when there is no credit proper supply of the in the country, it will try to enhance more credit facility through reducing the repo rate. So that is why it is a controller of credit. Banker to the government. Okay, and bankers bank. RBI is the apex bank which helps the rest of the bank, and RBI is the lender of last resort. And the 41st question we have here, that is from the part C. Explain the merit and demerit of fixed and flexible exchange rate system. It is being omitted for this year 2020. Okay, so I'm omitting this one. Part D, again 47th question we have. Explain the classification of receipt. Even this one is omitted for this year 2020. So as it is, I am omitting this one. Okay, but for the coming year it may be very important. And even the 44th question is the market equilibrium. Even this one is being deleted for this year. So as it is, I'm omitting these and all. So that is it. I hope this video really helps you. If you found this video helpful, do subscribe, encourage to my channel. I request you, okay, and I want your positive suggestions as well through the comment, and share it with your friends so that they could also get maximum marks in the exams. Okay, thank you very much.